Good day, guys. This is Trading Arbitrage Opportunities with Calvin Potts. Yeah, we're having what we're looking for in terms of the market dropping below this secondary trend line, which is a daily time frame trend line. We were looking forward to having the market uh, either land on the weekly time frame trend line or the primary trend line or below it. We're expecting the market to either weaken or hold. So both this daily time frame trend line or secondary trend line is giving us the third touch, and it looks like it's manipulating it. According to price action, when you get to see a manipulation on the third touch of a trend line, it's normally a bullish signal because what the central banks are doing, or what we call the what the banks are doing, or what we call the market makers, they don't trade with their own money. They trade with the money that they make from manipulating retail traders, from collecting stop losses. Let's say this is a third touch, and a retail trader has I want to use this thing, and a retail trader has an entry level over here on this trend line, and the stop loss is like somewhere here. Let me just turn this into a green line. The entry level is at the trend line here, and the stop loss is here. What the market makers do is that they collect every single stop loss that is down here, and they invest a little bit of money just to move the market below this trend line. And that little bit of money will make enough money for them so that they can be able to push the market higher. So it's like going to the filling station and refueling your vehicle because you have enough fuel to go to the filling station, but you don't have enough fuel to go on your long journey. So what happens is that the market makers use this week this market manipulation as enough fuel to go to the filling station to collect fuel, and then you get enough fuel to travel on that long journey of yours. So they just invest something as little as, okay, they invest a lot of money, but what I'm trying to explain is that they invest 2 cents. They invest 2 cents to collect a million from you, and they use this, and they use the million that they made here to push the market higher. That's how the market makers trade. Uh, so that is the reason why I was expecting the market to, you know, to go below this trend line. So normally when the market manipulates a trend line on a third touch, it's a bullish signal in the price action realm. Hope you understand. So here we also have what we call a third touch here. This is the first touch, the second touch on the weekly time frame, and then this is the third touch, which is why I'm expecting the market to either land on this third weekly touch or manipulate this uh, weekly time frame or trend line, which is a primary trend line. So I'm seeing this price action bullish signal, but this is not okay. This is only for price action traders. Here we have an interest rate decision by the Bank of England, the BOE. So normally when the Central Bank of England is cutting interest rates, whenever they hold interest rates, it becomes a bullish signal. Whenever they decide to hold interest rates, it is a bullish signal for the pound. So this is a second bullish signal. The inflation in the Bank of England is actually growing. It's a healthy inflation. So England has a healthy inflation. It's actually growing higher and higher. So if they cut interest rates, inflation will give us what we call an overgrowth, an unregulated growth. So the Bank of England at this point, fundamentally, they are most likely to hold interest rates because they don't want overgrowth in inflation. The benchmark that was set, but they don't want uh, the the inflation to move uh, that much away from the benchmark that was set by the central bank. So they are most likely to hold interest rates. We are expecting a 4.25% uh, interest rate at the end of the release on the 7th of August. So they are most likely to hold. So what the investors do is that they want to buy the market ahead of the interest rate uh, decision. But at the day that they release the interest rate decision, most traders they want to buy the pound SGD ahead of the interest rate decision. So what will happen is that this market will give us a rally before the 7th of August. This market will already be uh, moving higher and higher just before the 7th of August. I will be showing you the video of the market moving higher before the 7th of August, which is a fundamental system that we're using. However, we have two price action confirmations that the market, the banks will have enough money to push the market higher. How do we know that? Because the central banks are at the moment they are collecting stop losses here, making enough money so that they can move the market higher. So this is a price action confirmation for a bullish signal, and we I would be much happier if we manipulate a little bit of the weekly time frame trend line, which I said I was expecting a replica this rally. I was expecting the same distance from here up here. I was expecting it to move here and all the way up there, which is the replica of this. So those are the two bullish signals. Price action, bullish signal, the two of them from the primary uh, trend line or the primary channel, which is a daily time frame, and as um, this is the primary channel on the weekly, and this is the secondary channel on the daily. So there, I just hope that we can get that confirmation on the primary channel, which is the weekly. If we could just get a tiny wick and the market will move higher. That's just the confirmation that I would love to see. But it doesn't necessarily have to happen in that fashion because we have an economic divergence. So we made that uh, 10-minute mark. So I'll be saying goodbye to you guys. I'm not sure which episode this is, but I believe that this is the seventh episode, and I'll be seeing you guys on the eighth episode. Goodbye.